Hi, this is Dan Collins, editor-in-chief of Modern Trader magazine. That's right, Futures magazine has rebranded as Modern Trader because Modern Trader is who we serve, and we've always served more than just the futures community. We've written about futures, options, ETFs, stocks. So I think this is my first talk to you as editor-in-chief of Modern Trader magazine for Traders Exclusive. Briefly, I want to talk to you a little bit about crude oil market. Traders often look at either the technical side or the fundamental side. Some use both, but it's interesting that when markets appear to follow one, it may be following the other. Crude oil is the best example. We just had the Iran deal. We've had a lot of small skirmishes in the Middle East that typically has routed the energy in the crude oil markets. But really, since crude oil hit this historic 6-month slide, technicals really have been the story. When they hit the bottom in January around $45 and they started to move up, they came all the way back up to $60. People thought there was a historic opportunity to get long. But once again, yesterday settled back below $50 for the first time. Now, when crude oil broke that huge slide, it broke a 17-year trend line going back to 1998 when crude was trading at $10, touched in 2001, touched again in the 2008-2009 sell-off. Now, on the last day of January, crude rallied $3 before the close to settle right above that trend line, and in February and March it hugged that trend line. After kind of taking it out and going higher, we're right back down there with a little more than a week in the end of July. So I think traders should look at that. Right now that trend line is probably sitting at about $48.5. So that could be a good area to test. On the top side, the interesting thing is it stopped right at its 200-month moving average. So despite all the volatility going on in the Middle East, when you're looking at crude oil, look at your long-term technical charts because that's telling you something. An interesting part as I talk about futures rebranding as Modern Trader magazine, in our August issue that went out July 1st, we presented 10 reasons why you should perhaps think about selling stocks now. And of course, since then, stock markets have gone straight up. However, an analyst sent me a note today pointing out a big trend line in NASDAQ, pointing at the very, very top and saying, you know, this is when you need to be nervous and need to perhaps hedge your bets. The bottom is when you need to take risks. So yes, markets have been up, but there's a tremendous risk as NASDAQ is up at its 2000 high. Just as fundamentally today, the lowest non-farm pay, the lowest jobless claims in 41 and a half years. Now people are convinced that the Fed will raise rates in September, which I agree with. So, but that is maybe why you started to look at the technical side, and maybe this is looking a little bit oversold. Like I said, everyone's always engaged in the equity market, so when they're at this highs is when you need to think about having a hedge, making sure that your downside is protected. So keep an eye on this. This has been Dan Collins for Traders Exclusive, Modern Trader magazine. See you next time.